Have you ever wondered why the wealth gap keeps growing, no matter how much budgeting advice or investing content is floating around online? Why is it that some people make $40,000 a year and retire early, while others earn six figures and are still broke? Here's the truth you're probably not going to like: it's not about how much you make, it's about how you think. The top 1% don't invest like everyone else. And once I show you how they do it, and why most people are doing the exact opposite, you won't be able to unsee it. Now, don't make the mistake I did. For years, I thought investing was about picking the right stock, timing the market, finding that one golden opportunity. I was wrong. Dead wrong. And if you're watching this, you might be making the same costly mistakes. Here's what they don't tell you: the top 1% don't chase returns, they build systems. They don't check their investment apps 10 times a day, they barely look. And the shocking part? They're often investing in boring, simple things. But the way they approach those investments is radically different. Let's open this up with a simple question: are you investing to get rich, or to feel like you're doing something productive with your money? Most people invest emotionally. That's mistake number one. The 1% don't ask, will this make me rich? They ask, does this multiply my time, energy, or wealth in the next 10 years with minimal attention? It's long-term, asymmetric thinking. And if that sounds boring, that's the point. Because boredom builds wealth. Excitement destroys it. Let's go deeper. Most investors follow what I call the survival cycle. You get a paycheck, maybe put a little into a random investment, panic when the market dips, sell out too soon, and repeat the whole cycle in frustration. It feels like you're doing something smart, but you're really just reacting. Now compare that to the wealth cycle of the 1%. They create a system that removes emotion. Their investments aren't based on headlines or hype, they're based on principles, time, and discipline. They build portfolios the way architects build skyscrapers: slowly, intentionally, and with a blueprint. So what is that blueprint? There are 3 hidden principles that almost every top 1% investor follows, and that 99% of people completely overlook. Stick with me, because the third one is the reason you keep sabotaging your wealth without even knowing it. The first principle is this: money is a tool for ownership, not activity. Most people invest to feel busy. The 1% invest to own. That means owning businesses, owning systems, owning time. They're not obsessed with how fast something grows, they're obsessed with how long it lasts. That's why they love boring things like index funds, real estate, and long-term equities. Because boring means repeatable. Boring means durable. Boring means scalable. When I first internalized this, I completely restructured my portfolio. I dumped the shiny coins, the trendy stocks, and the panic buy ETFs. I asked one question before every investment: would I still want to own this 10 years from now if it never went viral? The second principle is: wealth is built in silence, but signaled through patience. The 1% don't check their net worth every day. They don't react to every headline. They're not trying to prove they're rich, they're becoming rich. In silence. And that's why they win. Because every time you panic sell, they're buying your fear. Every time you pull your money out, they double down. They profit off your impatience. That's the game. And until you stop playing checkers with your money while they play chess, nothing will change. Now the third principle. And this is the one that flipped everything for me. Invest from identity, not insecurity. This is the hidden mindset shift that changes everything. Most people invest from fear. Fear of being broke. Fear of missing out. Fear of getting left behind. But the wealthy? They invest from identity. They already see themselves as financially free. And every move they make is simply an extension of that belief. So ask yourself this: are you investing because you're scared of being poor, or because you know you're building something bigger than your current life? This shift changes everything. Once I started investing from identity, my decisions got calmer. I wasn't chasing anymore. I wasn't hoping. I was acting like the person I wanted to become. And here's the weird part: the moment I stopped obsessing over returns, my returns got better. Now, let's make this real. What do the 1% actually do that you can copy right now? They automate their investing so emotion doesn't sabotage action. They invest in boring, high-trust assets over hype-driven plays. They revisit their strategy quarterly, not daily. They tie every investment to a long-term identity goal, not a short-term emotional win. They measure success in years, not likes, shares, or daily price changes. They don't diversify out of fear, they diversify by design. They don't care about how their cousin's crypto coin is doing. They care about how their systems protect, multiply, and restore their time. Now you might be thinking, okay, but what if I don't have a lot to invest yet? That's actually your advantage. Because when you start with small money and rich habits, you avoid building wealth with a cracked foundation. You learn to respect the game before you have to risk big. And that's what the 1% do. They respect money. Not by hoarding it, but by mastering the rules that govern it. Here's what I want you to do. Stop thinking like an investor who needs results this week. Start thinking like a future millionaire who's simply building proof every day. Every dollar is a vote for the future. Every investment is a signal to your brain, I believe in what I'm building. And if you made it this far into the video, here's what I know about you: you're not just curious about money. You're ready to master it. But to do that, you have to unlearn 90% of what you've seen on social media and start thinking like someone who already has wealth. Because here's the kicker. The people who become rich? They start behaving like the rich before they have the money. That's the real secret. They invest like they already made it, because that identity drives smarter decisions. So the next time you're about to buy into a trend, panic sell a stock, or follow someone promising 1000% gains, ask yourself this. Would the top 1% make this move? Or am I doing it wrong, again? Because if you want their results, you need to start thinking like they do. Not next year. Not when you have more money. Right now.